matter when they're a product of growth. Like, let me tell you a story. Back in 2008, our fund manager, the idle speculator, he invested in TPG, and it was then like hardly known throughout the investment community. But today, TPG is paying a dividend that's equivalent or at least more than the amount that he invested. So the dividend, the special dividend that's a product of the merger that TPG's undergoing between themselves and Vodafone Hutchison, is 60 to 67 cents, or that's what it's estimated to be. His entry price was less than 60 cents. And it was because of that, basically that successful investment, that we got the idea, or one of those reasons that we got the idea to form Under the Radar. Basically, small caps can produce the kind of growth that you just can't get anywhere else. And that's why small caps matter. That's why we exist. Dividends really matter because of cash flow. Like, dividends are a product of cash flow. So when you're looking at investing in a company like TPG, you invest because of the idea. The idea was, for TPG to be a low-cost provider. But that was backed up by was the fundamentals. So the fundamentals of TPG meant that they could pay dividends because they were cash flow positive from the get-go. So dividends matter because they represent the idea that management and the board of a company takes their shareholders seriously. And also because they are obviously your cash in hand. But if that cash in hand comes at the expense of the long-term growth, then we're not interested. So dividends for us represent a byproduct of growth, not the be-all and end-all. And investing in the markets is about growth, make no mistake, whether it's small caps or big caps. But the fact is that small caps can grow much quicker than big caps. And that's why Under the Radar exists. And that's what we're looking for, to get those kind of stocks that can really transform your portfolio. The winners didn't stop at TPG, thank God. And we've had a lot of winners over the years, and the next issue is going to be our issue 400, and we're going to cover, our top 10 to top 15 winners that we've had, and the average return on them are like 9-fold on the original investment. And yes, some of those stocks impressed us from the get-go because of their dividends. But what impressed us more was the idea that management had and the company had, and on top of which the fundamentals of the company. So what are their competitive edge? Well, in Northern Star, the gold miner, they were a little gold miner back then, but Bill Beeman was an expert underground miner. Evolution, well, they were a little gold miner back then, but Jake Klein was an expert on the M&A side. So these companies all used their competitive edge, but what they also had was they were making traction right now. So they were cash flow positive, they were producing dividends, they were generally already successful, but what they were successful at was producing growth, and that growth wasn't priced in. And what we're looking for are the growth companies of the future. Well, reducing risk is important because right now we've got a big disconnect between what people see as the realities on the ground and the FOMO kind of realities of the market. So we're seeing rising unemployment, even though, in some cases the unemployment's less than expected, it's still rising, and we're seeing increasing amounts of debt. So we're looking at a fragile economic circumstance. In this sort of situation, the share price of many companies are rebounding above and beyond expectations. And that's partially because, the risk appetite is over and above what it should be, because the government is pumping a lot of money through the central banks into the bond markets. What we're looking at is a situation where investors need to take precautions, and that's what we're going to be looking at next week. So we're going to be producing a portfolio advice and how to recession-proof your portfolio. So, simple things like diversification we'll be covering off on. but we'll also be covering off on what sort of companies you need to be holding that can weather the storm for when, the inevitable occurs and that's expectations aren't met by reality. Look, we all know that these are highly uncertain times. I mean, there was a 6 or 7% sell-off in the markets, just last night, and the Australian markets are weaker. But I just want you to know that Under the Radar's team of investment analysts is dedicated to simply looking to make subscribers money. So we are going to continue to constantly update subscribers on the state of the markets and on particular stocks to buy, sell, and to hold. So that doesn't stop, that keeps going. So be well and talk to you soon.